Welcome to This Week in Real Estate, and I want to remind everybody every week, if this potato can become vodka, preferably Tito's, Cory and Jackie, then you can become a homeowner. So welcome to Sunday night, This Week in Real Estate, where we get together every Sunday night, just kind of talk about what's happening in the real estate market. Cory and Jackie kind of a little fun tonight. We kind of put some do's and don'ts together. So introduce yourself. Jackie, you start. How's your week been?
Week's been great, meeting with a lot of new realtors and clients. So it's been a lot of fun. Went to a couple Halloween parties, went trick-or-treating, and now back to the grind.
Back to the grind. Cory Otto, introduce yourself, where you're from, last four of your social security number, your birth date, and that little 3-digit code on the back of your credit card, please.
Right. Cory Otto, eXp Realty, from Portage area. Cover a lot of about an hour and a half radius of Portage. My weekend was pretty good. Actually, on Friday nights, I volunteer at the roller rink, and I really enjoy that. And showed some houses yesterday, had an open house, got an accepted offer for some buyers today. So good weekend.
Nice. Do you actually roller skate? That's one question I have.
No, I do not. I work the concession stands and hand out roller skates. I have not been on roller skates and do not plan on being on roller skates.
I think it's best for your career, Cory. Having to explain a black eye or a broken arm or something like that in a sling. So,
I was really looking forward to a video of him roller skating at this point.
Yeah, that could go viral on TikTok, Cory. I'm not gonna lie.
Yes, that's your sign right there.
Yep. So every Sunday night, This Week in Real Estate, we just honestly get together and talk about current topics and stuff like that. And Cory and Jackie came up with some fun things what'd you say, Cory? We want to make it fun, like make it a little more humorous, but at the same time we're being serious, kind of a thing.
Right. Yeah, people are going to remember it if we make it humorous. So I want to be funny about it.
I want to be funny too. Not funny, but funny looking. You know what I'm saying? So.
Right.
You got that covered, Jason.
Jason, can we nickname them the Roger Rabbit do's and don'ts of real estate? Inside joke only you and I would get, but thank you.
Well, I can kind of tell you the story. Cory and I had a buyer. He was the agent. I was the lender. And when you go to buy a house, we tell you, hey, we're under contract. Don't go buy anything until after closing. Don't buy washing machines. Don't buy new cars. And our buyer showed up in a brand new, like $45,000 motorcycle tripod thingamajiggy. What do you call those? The unicycle. You know what I'm talking about? The really expensive skidoo things. What was that called, Cory?
You'd have to ask Jackie. She's
I don't know.
Expert.
You're talking about a trike?
What is it?
No, wasn't a trike. One of those slingshots or whatever.
Oh, okay, yeah. Yep.
Yeah.
Slingshot.
They were always telling us how broke they were, and Cory and I did everything we could to help them get in the house. They show up in that. We're like, what? They're closing. So anyway, so that was our little joke, Roger Rabbit. We had a little fun with that. So it's all good in the hood. So.
I get started with the first one.
Yeah.
So these are do's and don'ts. We'll start with the do's. Do get pre-approved before house hunting. Think of a pre-approval like getting the green light from your parents before you borrow the car, if you can remember back then. It shows the sellers, the homeowners that you're making the offer on, that you're serious, and then gives you a better chance of getting an accepted offer. So we've discussed it in previous weeks where you really want to know what price range you're looking in. You don't want to be looking in a lot higher price range and then get pre-approved after you found a house and figure out that you can't afford it or that you don't like the payment. So getting pre-approved from an agent aspect, definitely is a lot easier to work with buyers that are pre-approved. They know what their payment's going to be. They know what price range they're going to be in. Again, I wrote an offer this weekend for some buyers, showed a house on Friday, pretty popular price range, $170,000, 3-bedroom, 1-bath ranch here in Portage. And, we had competing offers. So we actually on that one had to go a little bit higher, different from what I've said in previous weeks, but they were pre-approved and we got the accepted offer this morning. So pre-approvals.
Cory and Jackie, you always hear me say, everybody wants a $500,000 house. Not everybody can afford a $500,000 house, but not everybody who can afford a $500,000 house, not everybody wants that mortgage payment. And that's where I think there sometimes can be some sticker shock, because when you click on Zillow or Realtor.com or any of those things, all they show you is principal and interest. They don't show you taxes. They don't show you insurance. They don't show you PMI. And if you're looking at a $500,000 house, it's probably got taxes at $600-700 a month. That's a lot more payment. So to Cory's point, that's why you want to do a good pre-approval, know exactly what the price is going to be. So when you do go house hunt, you're not wasting the agent's time or you're wasting your time. So it works out better that way.
Yeah.
Yep.
Jackie, any thoughts on that?
Sorry, I missed what you said. You broke up.
I'm driving in the motorhome. I'm not driving the motorhome. I'm riding in the motorhome. I do not have a Tesla motorhome, guys, but that would be cool. I'm not gonna lie.
Nope. So another do that is super important that I feel like is more along like my lines as well is keeping your finances stable. So this is not the time when you're buying a house to quit your job and think you're going to be the next full-time TikTok influencer and make $1 million. As a lender, we want stability. It is all fun and games to, do the TikTok videos and stuff like that. If you get really popular, so be it. But don't quit your job in the middle of purchasing a house. Keep your job, your stable job. What you choose to do after you purchase your house is absolutely up to you. If you become a millionaire and a huge TikTok influencer, way to go. But when it comes to purchasing a house, keep it simple. Keep your job, your stable income, and keep it that way and don't change it in the process.
Whatever happened to that guy on TikTok? Remember the first one? Wasn't he the ocean spray guy on the skateboard in LA? Cory, the homeless guy? You guys remember that when TikTok first got started during COVID?
I don't remember that one.
I don't remember that one.
Jason, I didn't start TikTok until that one trip you and I took. I was like 2 years behind until we went to St. Louis together, and you got me hooked on TikTok, and it's been awful ever since. But
we have my team. We have a viral TikTok right now on Beer Money Pulling Team. It's got 12.2 million views from a tractor pull we went to this weekend. So it's pretty fun. So
that's awesome.
Yeah.
I think we can also touch on this one too when it comes to jobs. Like, I know with both of you, we've had deals in the past that we've run into it before. So even though we're kind of joking about the TikTok influence thing, there's hairstylists that get tips, waitresses, bartenders, strippers, things of that sort. Where if you have a job where you get tips or income outside of your regular paycheck, what do you guys, Jason? What do you feel is the most important thing to do? Is deposit those tips.
It needs to be seasoned. It needs to get in your bank and be seasoned for, I think, at least 60 days. Jackie, does that sound right? Is it 30 or 60 days?
They need to claim their tips.
Yeah.
Claim
but if you get it deposited, because as a lender, we're going to ask for 2 months of bank statements. So if you had $1,000 you threw in your account in January and it's April, we're not, because we're going to ask for February and March's bank statements. We're good. The reason we do that, fans, is because you can't borrow money to borrow money. And what caused the recession, people would go down to the payday loan store and they would borrow their down payment money at 30% interest, right? Well, then they get their house, and then down the road, they were trying to pay back, the Dollar General or whatever that place is called, and they had a hard time making that payment and that. So that's where we have to make sure you have the money. Sorry, Cory, it's not Dollar General, but it's like that.
Payday loans, yeah.
Like I heard one of those commercials today on the radio, 89 cash. Apply right now, get $10,000.
So if you do, if you are a person that keeps cash and you plan on buying a house or 2 or 3 months, you could make deposits, but it needs to be done 30 to 60 days before you're applying for loans. So if you have cash laying around and
get it in your account. Get it in your account. And to Jackie's point, like for a self-employed borrower, we need 2 years of tax returns. It's great to be self-employed and write everything off, except when it's time to go buy a house, because we have to prove that you can afford that house. Mm-hmm. And that's self-employed. So self-employment stuff. I mean, that's the whole idea of being self-employed, right? Let's write everything off. Let's don't show we make any money. We don't got to pay any taxes. But when we have to prove that you can afford to buy a house, then it gets a little more difficult. So that's where you want to talk to your lender ahead of time about that, because you might have to show that you make some money for a couple of years to do something like that. So let's talk about.
The same thing kind of goes with like your savings and stuff like that. What Jason was saying, don't keep $15,000 in cash underneath your mattress at home.
Right.
That is the worst financial decision you could ever make. Get it in somewhere where it is secure, it is traceable, and everything has to be documented. Like Jason said, we're going to only ask for 2 months back, but if you deposit $15,000 in cash, we're not going to be able to use it towards anything, closing house or down payment, because we have no way of showing what that money was for.
Again, because we don't know if that's money that you borrowed from somebody that you have to pay back, and it could affect your ability to pay back the loan. So that's what all that is. We're here to help, but we're trying to have some fun with this thing. So let's talk about credit a little bit, Cory. That was the next one on our list here.
Yeah. I think it's important. Check your credit score, know what it is. I know that we've had conversations before that, Credit Karma and things of that sort aren't going to be 100% accurate. When you guys pull credit, it's going to be different, but it's definitely a guidance. And I think it's important to check your credit often. If you end up having, some late payments or some balances. I mean, I've shared it in the past before. I ended up applying for a credit card, an airline type credit card, just to get some miles. I actually didn't even use it, didn't even charge it, use it for any purchases or anything. I didn't realize that there was a yearly fee on it for $65 or something. And because I don't open my mail much, and everything I do is online payments. So I didn't have it set up for online payments. I ended up actually getting a late payment charge, and I used Credit Karma, and I got notified of a late payment and ended up taking care of it. But if I wouldn't have been, checking my credit, I wouldn't have known about that. And it brought my credit score down for a month or so. So it's definitely, even though they're not 100% exact, and when, lenders pull credit, it's going to be, higher or lower, it could be. But, I think it's important to make sure that you're just keeping track of your credit score, because it is important.
Yeah, I would say if Credit Karma, all those places are soft pulls, and I know Jackie understands this, but I kind of want to explain it. Those aren't hard pulls. They're just making some assumptions that some stuff's made on time. And that's like when people say to me, well, why do you have to do? And then a hard pull really doesn't cost you 60 points. It costs you like 4. Those Credit Karmas show that, you had your credit pulled, your credit score went down 60 points. No, the only way your credit score is going to go down 60 points is if you miss a payment on a credit card, or if you're maxed out on all your credit cards, or you missing a payment's what kills you. That's really what wrecks 45, 60-day late, 30-day late. Those wreck your credit fast, and that's what sucks. But it happens.
Yeah.
Absolutely. So,
go ahead, Jackie.
Yep. So I was just going to say some other really important do's to have as well too is ask questions, especially to your lender. I know it's an exciting process, and it can be sometimes a difficult process. And I know even myself as a lender, I try to make sure that I don't use what they call mortgage jargon when I'm talking to somebody. Don't just nod your head and say yes just because you want the process to go through. It may get repetitive, but I always like to ask during each section with people, what questions you have, what is something I said that you may not understand, or if something looks off, mention it to me. I'm also the same as any other guy that's out there. I'm not a mind reader either. So, my husband tells me all the time, I can't read your mind. So if something's wrong, make sure you tell me. I totally get that. Same thing goes with me as well. I am not a mind reader. I cannot tell what you're thinking if you don't say it. And I'm happy to explain something or dumb something down for somebody or anything of the sort. But like I said, when I'm explaining the loan options, I usually try not to use mortgage jargon, as they call it, because if you're not in the mortgage world, you won't understand it.
Yeah, I agree with that. I mean, I think sometimes too, when I'm talking to clients, I've been doing this for quite a few years. We do start using the jargon. Things just make sense to us, and the process is pretty normal to us. So, whether it's your lender or real estate agent, if there's something that you're not understanding, don't be afraid to ask, and we'll certainly explain it in more detail so that you do understand it. So, the one thing I also want to talk about is, having some money in savings. I am, I always haven't been a best with my finances. I like to buy stuff and spend money and have cool things. But I do think it's important to have money in savings. We've talked in previous podcasts, and I do think buying a house is important. Or I'm sorry, having savings is important when you're buying a house. If something comes up, furnace goes out, or the roof starts leaking, or things of that sort. I do think it is important to have money in your savings to be able to deal with emergencies that do come up. So.
And then Jackie, you touched on this one already, right?
Yeah, I was kind of jumping around there for a second.
Yeah, Jackie, when we have our pre-show meetings, okay, we need to stay in order, okay? We need you to follow instructions. We can't. Cory and I, you're just like your husband. We can't read your mind, okay, Jackie?
Tell me about it. Half the time I can't read my own mind.
So I think, Cory, next we're going to go to mortgage application don'ts. Okay, so I'm going to put this one up.
Yeah, so we touched on this before, and we were kind of joking with our story about Roger Rabbit, but don't make any brand new purchases, either shortly before, during, or obviously right before closing. It always concerns me when people have the way vehicles are right now. Brand new vehicles are great, but if you start having a $600, $800, $900 a month car payment for a boat or UTV or things of that sort, those are going to affect what you would actually then be able to qualify for monthly payments on getting a loan. So don't make any big purchases anytime before you're going to be buying a house.
Absolutely. So something to kind of like touch point on that we see it so often when it comes to people like purchasing like the vehicles. The vehicles is one of the most popular things that I see that, each person has a brand new vehicle, like top of the line, $80,000 vehicle, and their car payments are more expensive than their mortgage because that's all they can afford. So something like that is something to take into consideration, but don't go and start racking up your credit cards and stuff like that when you're purchasing a house, because we can request documentation at any time for something if we see something that is off as well too. So lenders are like, I don't even know how to explain it. Lenders can be kind of like little ninjas in a way. We see everything on there. So, and we notice everything as well too. So, kind of to bounce back to another, like, don't forget to check your credit, on there. So when you're in, like Jason was saying, Credit Karma is not the best source to use. I would suggest using like the free credit report.com. You get that free once a year for you. Credit Karma is personally just really good for tracking purposes on there. I actually ran into the same issue like Cory did, where somebody actually had went to go and actually open up a credit card in my name, and I instantly got notified when it said, hey, it looks like you got approved for a new Amazon credit card recently. Is this your transaction? So then instantly I'm on the phone with Amazon right away. But it is important to kind of have, understanding, knowing where your finances are with your credit and where it's sitting at. Are you going to get the most accurate score? No, you're not. I feel like credit scores change every single day, no matter who you are. But that's kind of the situation. But at least then you know where you're sitting at, so you know roughly, am I ready to buy a house now, or is there stuff I need to clean up?
Mm-hmm. And, Jackie, I know you and I had a discussion earlier today about a client. And, the other thing when it comes to credit scores is there's, two types. There's either bad or negative that creates issues. But then there's also a lack of credit. So Jackie and I are helping out some clients here. Jackie's trying to get them pre-approved. They're actually in great financial position, paid off all their debt, don't have any payments, don't have any car payments, don't have any loans, don't have any credit cards, but it's actually, right, Jackie, negatively affecting their credit score because they don't. So there's definitely some guidance to it. I know Jackie and I, and we've worked with buyers before that don't have any credit, and we've certainly recommended, opening some small credit lines, credit cards, and such to be able to help build your credit. But you definitely don't want to be maxing them out. And at least if your credit limit's $2,000, you at least want to stay under 50%. Don't want to ever have a balance over $1,000. And lower would be better. So there are some times that we do encourage people to get credit cards or some type of loans or personal loans and lines of credit. But it's definitely something that you don't want to max them out either, because that'll negatively affect you.
Yes, absolutely. And another thing is it's all fine and good to pay off all of your debt that you have, but it does come in a point where you've worked so hard to get an 800 credit score. You're literally just making it disappear and all that hard work disappear if you pay it all off and you don't have an open line of credit. That's where we always encourage somebody to have at least one open line of credit. It's all fine and good to close and pay off all of your stuff, but leave that one line of credit at least open so that you have something that's still building credit for you.
Yeah, I like it. Stability. So think of lenders like that friend who needs stability. If you job hop right before you apply, it'll stress them out. So as we had talked and joked before, save your career leaps for after closing. So there are, Jackie, I think there's some exceptions that, we've certainly worked with people that have moved from another state to come here to this location and want to buy a house when they get here. And there is some type of allowance for that, Jackie, when you're in the same profession. Is that correct? If you've just transferred, but as long as you stayed in the same profession?
Yeah, as long as you're still in the same profession, or like a transfer job just to a new city or something along those lines, it doesn't negatively impact you.
Yeah, and the biggest thing, like if you were a truck driver and you got mileage for 2 years, and then all of a sudden you switch over to getting paid by the load, then we can have some problems with that as well from that. So just want to throw that in there.
Cool.
Yep.
Here you go, Cory. You want to talk about major purchases?
Yeah, I think I talked about that. It's just another funny way of saying it. But yeah, we've certainly stressed this in several different topics that we've discussed. Just not making any major purchases that are either going to deplete your savings, or especially if you're purchasing that major purchase with some type of loan or on your credit card or something. So, there are some times if you're moving from an apartment, or you don't have much furnishings, or it's your first home and you get excited, or you want to pre-order a carpet because you want new carpet in your house before you move into it. You throw it on a credit card. So there are some things that you may want to purchase when you're, to fill up your brand new home, but definitely wait till after closing for that.
Absolutely. And this next don't just had me cracking up when I read it. Don't marry someone with bad credit if possible. So all jokes aside, we're not telling you who you can and cannot marry. But it is really important to make sure that you both understand what your finances look like ahead of time before you purchase a house. That way it's not a huge shock that you just got married 3 months ago and now you want to buy a house and you go in and one has a 450 credit score and one has a 780.
Yeah. So there are things that I've seen that we have been able to do in the past, Jackie. So I don't want newly married couples or couples that one of the two people have bad credit. There are some things that can happen where only the person with good credit is the one actually getting the loan, and the house ownership can both be in both spouses' names. But yes, there are things that can happen, that we can help with, that you still can do a purchase, but it is good to, check with your love of your life's credit score prior to getting married.
Yeah, because I mean, your purchasing power is literally getting split right in half if you have to take that one person off. You can't use any of their income or anything like that if they have too low of a score and they can't be on it. So your purchasing power gets literally cut in half. Wisconsin being a marital property state, even if you are married, even if they're not on the loan, they're going to be on title. Either way.
What do we have next here? Oh yeah, even though it's so yeah, don't co-sign for a loan. I think I don't know. I feel like Jack, do you see co-signing much anymore? I feel like that used to be something that happened more in the past, but definitely something to pay attention to. Where I've had it before where I've either tried to help somebody out and co-signed or put them on as an authorized user on a credit card. So just be aware of. Even though it sounds like a good deed to try to help somebody out, that if you are co-signed on a car loan or another loan with somebody, that it is actually going to negatively affect your purchase power.
Yeah, and I mean, I don't see it a whole lot anymore. I see it more where like parents have co-signed for their kids for like their student loans. I see that, but like even in situations like, yes, you should not co-sign unless you really, really trust the person. But in situations where you can prove, because I mean, when your credit's ran, that debt is yours just because you co-signed on it. Just because you don't pay for it, it's technically yours. Unless you can prove like a minimum of a 12-month payment history showing that it came from somebody else's bank account that they're paying it, then we may be able to take it out of your debt to income ratio, but that's not always the case every time.
And we kind of joked about or talked about this one too, is without making big deposits that don't have good documentation. Any type of deposits made. Again, this is just going back to not holding on to cash, not keeping a bunch of money under your mattress, and then when you are ready to purchase, making a big deposit. So it is important that even if you get gifts, or I've actually had some clients before that got quite a bit of cash money for their weddings in the past when we were talking about marriages here. And so it is important to get that in the bank as well.
Yeah, absolutely. I actually just ran into this issue as well too, where a gentleman was like, "Yeah, I've got like 15,000 if I need to use it." And then I get the application and it shows that there's only $1,000 in a bank account. So I had asked about it, and he's like, "Oh, it's in my safe at home." I'm like, do you have somebody that you can give all that cash to that would be fine signing a gift affidavit and then writing you a check for it? I'm like, you can't use it because it's not, there's no way to track it. It's got to be documented some way. So there are ways around it. But if you don't have family or somebody that is an eligible gift donor that's close by, or somebody that you can trust, it can cause a lot of issues.
So yeah, buying a house and is actually the ultimate adulting move. So keep your finances in check. Check your credit often. Don't make big purchases. This is just kind of a all-inclusive type statement that we've mostly touched on. But yeah, it's bad choices can affect your credit. Bad choices can affect what price range and payment that you're eligible for. So it's important to think ahead, plan ahead, talk to an agent, talk to a lender. Again, I've said it before, but I'll keep saying it, that even if you're 6 months or a year out before you're ready or in the position, or think that you want to buy a house, get pre-approved, because these things are going to come up. And if you're doing it 6 months ahead of time, when things come up, once you do your pre-approval application, we can help you through getting some things fixed so that your credit is good when you do decide that you're ready to start looking and make some offers and do a purchase.
Absolutely. I couldn't agree any more than that too, Cory. It's important to start now. Know where everything is at right now, and know where your credit and stuff is sitting at, and have a goal set in place. If your plan is to start purchasing or looking at houses or getting a pre-approval officially to go in the spring, so March and April, when a lot of people do start buying, you want to know where your stuff is at now in case there's a surprise somewhere that you have to work on through the winter.
Absolutely.
I think this was something I like how we set this up, Cory and Jackie. Like I said, having a little fun with it, but also being, nobody wants to be told no, right? So if we can kind of get the word out there about people ahead of time, because at the end of the day, we want to help everybody that we can. So I think this is a fun little way of doing this. I turned my camera off because I don't want to see guys shaking me in the back of a motorhome, making everybody sick that's watching. So but hopefully my sound is still okay. So.
Oh yeah, you're great.
Yep, you're so good.
But yeah, I mean, I like this. I mean, kind of touched on credit cards. I consider myself a mortgage expert. Jackie, Cory, you're a real estate expert. I think too many people talk to their friends or their family, and like I always joke about, if you want Mexican food, you don't go to Taco Bell. And if you want to, and if a potato can become vodka, you can become a homeowner. I think a little humor goes a long way. But talk to somebody who actually knows and deals with it every day. Not somebody. Well, this is what my buddy said, or this is what my neighbor said, or this is what my teacher said in high school. Go talk to us. If you can't talk to the three of us, we're like the easiest going people you ever meet in your life. You may not like everything we say, but we're going to tell you the truth. So
yes, sometimes the facts are hard to hear, but you'll appreciate it down the road. And one of these days, Jason, Tito's is going to sponsor you with how many times you mention potatoes. I'm waiting for it. One of these days, we're going to see them jumping in on our podcast, and they're going to be like, you guys are officially sponsored.
They're out of Texas, right? I think
so.
I think they are.
So yeah, I certainly just want to add to that, if you have any, the things the topics that we touched on tonight, if it either you need more of an explanation, feel free to leave a comment, send one of us a private message, or if just this discussion alone brought up some other questions that you have about the process, again, you can put a comment down below. You can send us a private message. If there's a topic that you want us to expand on more in the future, that's what we're really trying to do here, is just educate and help with terms and help with, explaining what the process is from start to finish, just so that you're more knowledgeable and prepared and can be more educated buyers and more educated with your finances. So great fun sharing these items. And again, if there's any questions that arose because of the topics that we brought up, feel free to comment or message one of us, and we'll certainly get back to you or expand on it in future weeks.
Or feel free to message any of us too, ideas. If you guys want to talk about something specific, we can dedicate one whole entire night of a podcast to what you're wanting us to talk about too. So feel free to message any of us or comment on one of ours to give us an idea. Who knows? Maybe one of these times up here soon, maybe we'll do like a raffle of somebody, if they all comment an idea for us to do, and we'll pick somebody random.
Jackie, we don't need to have any more stress, okay? Last time you did a fundraiser, you were all stressed out.
You know what? Why not? I haven't had one in maybe a month. So why not just start another one?
So you're saying you're bored? Are you bored, Jackie?
No, I'm not bored. I promise you.
Good. Well, Cory, Jackie, thank you for another great educational, motivational, and humorous This Week in Podcast Real Estate, brought to you by Cory Otto EXP, Jackie and Jason from USA Mortgage. And as a reminder, if this potato can become vodka, you can become a homeowner. Good night, everybody.
Good night.
Good night.